be here in this session of sustainability, a subject which has drawn much attention in the recent times, though it's an emerging phenomena having many challenges and little obtuse at the moment. Sustainability reflects upon the wider impact that organization decisions have on society and environment. It is no longer enough to report solely on the traditional financial metrics. Stakeholders are challenging organizations and governments to demonstrate how their operations are impacting society and the environment and what is being done about it. From an accounting and auditing perspective, it presents a challenging because social, environmental, and human capital are intangible assets, and assigning a value to these in financial statements involves a lot of value judgment. As already held, after adoption of Sustainable Development Agenda 2030 by the United States in 2015, the members countries have started aligning their development portfolios and programs. You will be delighted to know that Pakistan was the first country to adopt SDA Agenda 2030 through a unanimous resolution of Parliament of Pakistan and its own agenda. The Sustainable Development Agenda contains 17 goals called the SDGs. We are almost in the middle of the implementation of Global Development Agenda despite numerous challenges. Sustainable development that meets the need of present without compromising the ability of future generations to meet their own needs has become a mainstream issue. Performance of businesses, governments can no longer be judged purely on financial returns to shareholders and budget executions. Customers, workforce, society, government, and investors are now demanding greater organization, transparency beyond the traditional financial matters. Sustainability is fast becoming the lens through which an organization would be judged. International investments and global investments portfolios are increasingly calling for high quality, transparent, reliable, and comparable reporting by companies on climate and other environmental, social, and governance matters. Sustainability reporting is often thought of as having three components: environmental, social, and governance, or more commonly, the planet, people, and profits. The sustainability audit checklist looks at the following areas, like in environmental: what is the business doing to reduce the waste? What is the business doing to conserve resources? What is the business doing to reduce its carbon footprint and reduce its use of toxic materials? How is the business engaging with suppliers to promote sustainability? On the social side, how has the business engaged employees and ensure they are treated well? How and what does the business give back to the community? Likewise, on the governance side, does the business has the necessary support and infrastructure to develop a strong sustainability program? Though sustainability reporting has been on the accounting and auditing radars, but it is yet to take a uniform and standardized format. It has taken many different forms. There are stand-alone reports that can be published annually or biannually. Alternatively, sustainability reporting can happen via a suite of reports that are also published online. Although currently it is more common for organizations to publish environmental or social information in separate reports, there are also approaches that combine these with the annual financial report. Further, the Global Reporting Initiative, GRI, International Integrated Reporting Committee, IIRC, Sustainability Accounting Standard Board, SASB, and others have yet to come up with a uniform standard for sustainability reporting. What is also important is that reporting framework or requirement should not be too complicated, and reporting can be integrated into organizations' normal management systems. For sustainability reports to be credible, the reliability of the report is important. Assurance on the reliability of sustainability information can be provided by an external auditor, in contrast to the financial reports, where measurements, control systems, and standards are sophisticated and assurance processes are well established. The assurance of sustainability reports is still developing and is mostly voluntary. A particular challenge is that the conventional accounting profession is often not able to deal with all sustainability information and the interdependence of environmental, social, and governance issues. Although traditional financial auditing is prepared to deal with accounting systems, processes, and controls to substantially analyze sustainability data and provide assurance on sustainability reports might require setting up teams of experts with different backgrounds. Particularly important are here the knowledge of methods used in performance auditing and environmental auditing. Besides auditing guidelines and subject matter, it might be better if the auditors have good knowledge about stakeholders' engagement processes. However, it should be emphasized that auditors' difficulties in dealing with sustainability information should not be a reason to prevent this reporting. Up to now, sustainability report has been a phenomenon associated with large companies in developed countries only. In future, this report will spread to public sector and emerging economies. Up till now, developed countries have been the most influential in the debate on international reporting standards. The shift to other countries might also lead to a uniform reporting practice and standards. This may also lead a stronger role for the state in its regulatory function to ensure minimum level of disclosure and gradual integration, resulting in a combination of cooperate, governance, financial, and sustainability reporting into one integrated reporting format. The independence and professionalism of workforce of the supreme audit institutions of a country allows them to act as neutral organizations, assessing the suitability and effectiveness of reporting framework in their countries. SAI objective is financial statement audit reports looks at more extensive accountability than in other sectors. In the public sector, what matters more is information on policy and policy effects, which are often presented in form of key figures and performance indicators. To begin with, SAIs can audit sustainability reporting from a compliance and performance perspective without directly providing assurance on reports. SAIs can also approach sustainability by auditing the implementation of sustainability strategies. SAI would most probably need to build up capacity related to sustainability and addressing these issues in audit work. If this reporting is introduced with expectations of assurance of sustainability reports, individual SAIs will need to consider their capacity and ability to undertake assurance. If sustainability reporting was to increase the public sector and SAI decided to provide assurance on sustainability reports, INTOSAI working group on environmental audit might wish to consider helping SAIs by providing guidelines and sharing best practices. Such help would surely fructify. Ladies and gentlemen, performance audit and special audits of important projects and policies are a regular feature of SIA Pakistan auditing horizon. SIA Pakistan has started preparing report on important issues facing the country. We are looking at what are the bottlenecks for establishing an industry, how much time it takes, how much money it requires, and what steps are involved, and what difficulties the industry face in subsequent operations. This is coupled with a study regarding the expansion of our existing industrial base and potential vertical linkage between industries. Another initiative has been on the preparedness of the country for implementation of SDGs under SOSI. This is another study on the changing use of land pattern, especially the change of agriculture land to housing and its impact on food security. These are our efforts toward a sustainable and equitable development. Ladies and gentlemen, anyone involved with decision making at an supreme audit institution or accounting or financial services firm knows that profession is undergoing dramatic changes, some which have progressively emerged for years, while others, no doubt, were speeded up by the global COVID-19 pandemic. The effect of these changes are hitting organizations from every angle and producing a new set of challenges in many ways, like automation, artificial intelligence, new set acquisitions. As more transactional work becomes automated, accountants will need to develop different skills to apply their expertise to information and data gathering from new technology and play a wider role in the business strategy. Cloud-based accounting softwares, budgeting, forecasting, data analytics, and visualization tools are building some of the foundations for automation in accounting. It is therefore no surprise that the need for new skills is the number one anticipated business challenges for accounting and financial service providers. Likewise, cybersecurity, as per American Institute of Chartered Public Accountants, takes on average of 280 days to identify and contain a data breach. And the average cost is 3.86 million US dollars. The lion's share of these breaches is initiated by stolen or compromised employee credentials. The accounting and auditing teams regularly receive emails and attachments or links to invoices, and it is not hard to see how easy a malicious link or attachment could make its way unnoticed into the workflow. Accounting and auditing teams are well suited to be evangelists of cybersecurity companies company-wide, as they are already schooled in robust internal controls. Outdated softwares can increase the success rate for malware and ransomware. Cybersecurity skills and updation of software is another cost to the business. The costs need to be minimized by developing in-house softwares with robust security features. Like many other industries, one of the top accounting trends is a desire for a more flexible and to work remote from maybe from home or any other place. Research has indicated that vast majority of accountants and auditors would like to continue to work remotely. But remote working brings challenges to accounting and finance teams who for decades have done tasks such as month-end closing at their offices by sitting late into the night. Remote work also aggregates the risk of cyber attacks, with IBM finding that 70% of companies that have adopted remote work during the pandemic saying they expect it will increase data breach cost. Ladies and gentlemen, sustainability demands partnering to pool up resources, expertise, and striving together for a better tomorrow. The international community, national organizations, public and private sectors need to gear up resources to achieve sustainable development goals. In the end, I must say that the accounting and auditing profession has successfully embraced the new challenges over decades. Sustainability reporting and assurance will also find the auditors and accountants responding in a positive manner to help the organizations in their sustainable decision making. It has been a pleasure talking to such an august and learning gathering. Thank you very much. Have a good day.